Welcome to Investors Insights. Our topic today, it's all relative. My name is Greg Powell, President and CEO of Five Plan Partners, and I'm joined by my distinguished colleagues, Bobby Norman, Trey Booth, and Tom Miller. We all serve on our Portfolio Strategies Committee here at Five Plan Partners, and I'm very excited about the topics we're going to share with you today. You need to watch this vlog to the end because we're going to have multiple topics, but it's all relative. It's all connected. We're going to show you the amount of data that we're watching as we navigate through some of these volatile markets and news and other things that are taking place. So hang tight, and we look forward to the discussion. Gentlemen, great debate this morning. Love the way you all came at the different topics in different ways. Bobby, you talked about tariffs. Why don't we start off with you, because that's been a big headliner in this attention economy, as we call it. Everybody's trying to get your attention, and tariffs have definitely gotten everybody's attention. So talk about that.
Yeah, so I had a conversation with a client last week, and they were asking me about which country is most impacted by the tariffs and the potential trade war. So I want to share this chart that shows among the countries that make up the G20, Germany is the most reliant on exports. Last year, exports were roughly 45% of the German economy, and the U.S. is one of its biggest customers. But in contrast, exports are only 11% of the U.S. economy. So obviously, Germany's strong reliance on international trade with the U.S., particularly in the industries like automotive, machinery, chemicals, illustrates that neither country wins with a trade war. Rather, investors really must estimate who is least hurt. And this chart helps explain why countries who are more reliant on exports like Germany and France will be more interested in negotiating than countries like India and China, as you can see in the chart on the right-hand side, whose economy is not as reliant on exports. So this matters because we analyze this type of information when building our investment strategies around these type of events.
It's a hot topic, needless to say, and we're going to keep everybody updated on this. And also, I'd encourage you to go back and watch our previous vlogs because, Bobby, correct me if I'm wrong here, but that's been a topic we've been discussing for some time now. I know Todd's done research on it, and you have as well. So we will keep everybody updated on this, and we'll also do it through our social media, our vlogs, our podcast, LinkedIn, Twitter. We will make sure our clients get information not only in relation to the tariffs, but how it could impact their portfolio or their financial blueprint. And Trey, Canada. We got to talk about Canada because it's definitely been in the news as well, and U.S. corporate earnings. Talk to us about that.
Yeah, thanks, Greg. Yeah, our neighbors to the north are going to the polls today. They will be electing a new government, and that's always important. You want to have a good relationship with your closest neighbors and trading allies. But it's extremely important right now because during this whole uproar around trade discussions and tariffs, when it came to Canada didn't have a leader. They didn't have anyone in place to be on the other side. They had two individuals that are running to become the Prime Minister of Canada, but neither really had the standing to actually negotiate. So it's been kind of a one-sided yelling match on the U.S. So it'll be good to finally have a two-sided discussion with both sides at the table actually able to make a decision or make an agreement. No, there is no party on the other side. But to put into context, how important Canada is, versus the other big news event this week is corporate earnings, and a lot of focus has been taken off of corporate earnings in the U.S. And while yes, what's happening around the world in tariffs is definitely impactful, corporate earnings is what drives the U.S. stock market. The Canadian stock market in total has a market cap of roughly $4 trillion. Now, that $4 trillion is a big number, but when you put that relative to the U.S. corporations that are reporting earnings this week, 3 companies that are reporting this week have a market cap above $2 trillion. One has a market cap above $3 trillion. The 6 largest companies reporting earnings just this week have a combined market cap of $11 trillion. That's nearly 3 times the size of the entire Canadian stock market. So remember, while we definitely want to keep an eye on what's going on globally, and it definitely impacts things, don't take her off the ball, which is the day-to-day running of large U.S. companies and how that impacts U.S. stock markets, because that's how companies can get mispriced, because you're watching over here the shiny object, where we're definitely in the attention economy. People want to focus on the shiny object, and they lose track of what actually pushes things forward. And these large companies and what they report looking backwards and what they project going forward will have a much bigger impact in the long run in terms of portfolios. It's something we're going to have to keep an eye on this week closely.
No, that's well said. So thank you, Trey, and we will keep everybody updated on this. So a lot of things going on, but again, it's all relative. And so we've got to watch all of this. And with that, from a historical standpoint, and let me say this, Bobby, we've gone back and looked at, from a historical standpoint, the impact of tariffs. Trey, in terms of what's going on U.S. corporate earnings and everything, we're always looking at historical data as well as the current events that we're dealing with. And Ty, in your meeting, you brought up historical data, and I jokingly said, it's act like it's 1998, it's 2018. You brought up those 2 years as historical references. Talk about that.
As everyone knows, popular saying for us is, history doesn't always repeat itself, but it often rhymes. And so 2 important years that we seem to be kind of rhyming with here are 2018 and 1998. And so if you think back to 2018 to start with, President Trump, of course, was in office for the first time. It's a very similar time frame to kind of that fourth quarter of 2018, and specifically December. We had a major trade event disrupting, stocks, and that was a meeting with Trump and President Xi of China, where they kind of gave no roadmap of where, trade was going. And that was the first time we were kind of implementing tariffs on China. And then a couple weeks later, the Fed kind of threw some gasoline on that fire and said, we're not going to end, our tightening campaign. Things, we're more worried about, inflation because of the tariff impact than we are about growth. And so that resulted in some recession scares. And then Trump kind of said, Jay Powell, the Fed chair, is doing a terrible job. I want him out. I'm going to fire him. So fast forward to, today, and you'll see in this chart how similar they are. Fast forward to today, April 2nd, tariff proposal, huge tariff, kind of proposal here. And then Powell gave a speech, again, more worried about inflation than worried about growth. And, stocks are kind of, a little worried about recession. And then kind of what happened in 2018 as Powell reversed his stance, ended tightening, started to be a little easier on rates. Policymakers were able to pass, TCGA and some other important elements. And so that's kind of where we're at right now. We're in the thick of things where is Jay Powell going to reverse his stance? Trump, of course, has already talked about firing Jay Powell again, but then came out and said, I would never fire him. And so we're kind of in this recycle of 2018, which is really unique. And, keep in mind that 2019 was a really good year because this was at the end of 2018. So if we can get through all of this noise right now, and we, of course, have a possible tax bill coming up, things could be looking better on the horizon. But it is quite eerily similar to what we were dealing with at the end of 2018. And then the other time frame that I mentioned, as you can see in the chart here, follows very closely, more from a technical perspective, is 1998. That was the long-term capital management bailout. And so we had a big sell-off, and then kind of the market kind of rallied for about 30 trading days or so. And then we got a retest of those lows. And that's a similar scenario that we've kind of painted out in previous vlogs of you have this big bang event where the market drops and then you kind of go down, you kind of consolidate and then come back down with a whimper, maybe make a new low, but it's not as dramatic. And then at the end of 1998 was great, really rallied from there. And so very similar kind of pattern we're following right now. And we'll see if we get that kind of second pullback whimper kind of phase.
Yeah. And I think you're bringing up a great way of saying we look at what ifs. And what I mean by that is, what if things change on the tariffs? What if things change on corporate earnings and with Canada? What if we start to look like 1998 or 2018? We're always looking forward. Yes, we're looking at historical data. We're looking at the current scenario. But what if? And we look at the different scenarios and possibilities that could take place. So we've already got game plans ready to move on things if we need to, in relation to our clients' financial blueprints. So keeping that in mind, just remember, you heard a lot of data here from historical, current, what if, looking towards the future. And just know that each and every day here at Five Plan Partners, we are striving for our clients to have better, richer, fuller lives. And remember, it's all relative. And we're going to keep connecting the dots, keeping you informed. And we also want to make sure that you know you've got open communication to us all the time, whether it's on the phone, through a Zoom or WebEx, whether we need to meet in person, or from the standpoint of watching our vlogs, our social media, and all that we're doing to communicate with you and your family. We thank you for believing in us. We're getting ready to end the month of April and head towards May. And we want you to continue having a great year, and we'll keep you updated. Thanks.